6:03, so we're going to get started. First of all, a huge welcome to everyone here today, whether it's your first time or your third time and you've been following along with our financial education workshops. Today, like I said, this is the third out of the fourth. We're celebrating Financial Literacy Month with this series, Money Mondays, and today we're going to be talking about credit. We're going to be talking about understanding credit, what it is, the factors that affect it, and a few things to keep in mind so that you can use credit responsibly. Okay. If you don't know me, this is your first time. My name is Alessandra Vecino Gasabon, and I'm the Economic Empowerment Program Coordinator at the Hispanic Federation. And just a few housekeeping things before we get started. First of all, make sure that you are muted throughout the webinar. Click the Q&A button to submit your questions at any time. At the end, I'm going to review the questions and we'll get into a conversation. If you want to make some comments, you can use the chat for that. And also note that this webinar is being recorded. Okay, so let's get started. The goals for today's workshop are understanding why good credit is important for your life, knowing the important concepts related to credit, and the third one is to learn a few strategies to build and maintain good credit. So let's start with credit and what is it? In this context, is it a predetermined amount of money that a financial institution is willing to loan you, aka a client, in order to acquire products or services right away and repay it in the future? And one of the biggest things about credit, and you might have heard this over and over, is the credit score. And as you'll see on your screen, a credit score is a number that is between 300 and 850 that tells the financial institutions about your credit history and habits. And a good credit score refers to scores 700 and above, but as you can see in this graphic, there are several different stages. So you can see that between 300 and 579 is considered as very poor, fair, 580 to 669, good between 670 and 739, very good between 740 and 799, and exceptional credit is considered above 800 up to 850, which is the maximum. So this is something that you want to keep in mind of. According to experience, 66% of Americans have a good credit score or better. And good credit allows people to meet their financial goals faster. The score is proof that you know how to use credit responsibly and you have a history of paying back the money that you borrow on time and consistently. And not only that, when you apply to other loans or credit, whether your financial goal is to buy real estate like a house or an apartment or a car, or even going to school, whether it's for yourself or your children, you're more likely to get your application approved and qualify for lower interest rates for these if you have a good credit. And lower interest rates means that you will be saving money in the long run. So these are really important things to keep in mind into your credit journey and understanding why it's important to maintain good credit. So let's talk about what affects credit precisely. There are 5 factors, and the first one is your payment history. And this is the frequency and punctuality of your payments. Are you paying on time, and are you actually making your payments? The second one is credit use. This is how much out of the total amount of credit that you've borrowed you're actually using, expressed in a percentage. The third one is credit history, and this is how long you've had your credit accounts open and in use. Then we have credit mix, and this refers to the different types of accounts that any person can have, from credit cards to loans to mortgages, so like all those different types of credit. So that's what it is referring to. And new credit is just how it sounds like, the amount of accounts that you've opened. And these 5 factors affect your credit score in slightly a different way. So here we have a chart with, what affects it higher and lesser. So we have payment history and credit use that are the biggest impacts on your score, at 35% for payment history and 30% for credit use. And then the rest is divided in 10% for new credit, 10% for credit mix, and 15% of length of credit history. So you want to, make sure that you are making your payments on time, that you're not using all of the credit that you have, just to show that you are using it responsibly and, increasing your credit score. Upcoming, I want to talk about the important concepts to know when we're talking about credit. And that is namely the different types of credit, so that you understand what it is that you are getting. And the first one is an installment credit, which is a loan with interest made for a specific amount of money repaid with monthly fixed payments. Now, these are commonly include mortgages, car loans, personal loans. These loans can help you achieve some of the most common and sought after financial goals, like the ones I just mentioned, by allowing you to pay back that purchase over a long period of time. And usually, these are monthly amounts that are set, and you pay over, whether it's, 10, 15 years, up to 30 years, however that period of time that you settled at the beginning. The second type of credit is something called a revolving credit. And this is credit that is used over and over again up to a certain limit that is provided by the lender, and payments are made on time. So with these, you can choose either to pay off the balance in full at the end of each billing cycle, or carry over that balance from one month to the next. Of course, examples include, you probably, this hit your mind immediately, credit cards, personal lines of credit, and even like home equity lines of credit. And the difference is, credit cards can usually be used for either large or small expenses, while lines of credit, like the home equity one, are used to finance like major expenses, such as like home remodeling or repairs. So like these are a little bit of like what is used for revolving credit. Another concept that is really, really important to have in mind is the interest rate. Now, interest is the money that you pay for borrowing money. And the interest rate is the percentage of the total amount of money loaned charged by the lender for the use of his money. Interest rates apply to most lending or like borrowing transactions. And individuals, like I said, borrow money to do like many different things, purchases, projects, even to like start businesses and all of that. However, the money that is to be repaid is usually more than the amount you borrowed at the beginning, since the lender, the institution, requires compensation for the use of the money during that loan period. So during the time that you are borrowing that money, they're charging you this amount, and it's usually a percentage that is set. Another thing that I want to introduce you to today is the credit report. And we might have seen, ads on TV about like, different companies, or maybe you've seen banks say, you get access to your credit report, but what exactly is it? So this is a breakdown of your credit history at a particular point in time, whenever you request it, whenever it is pulled. And these are prepared by credit agencies. Now, these often contain the following information. For instance, personal information, your name, any name that you may have used in the past, current and former addresses, birth date, social security number, phone numbers, credit accounts, current and historical, including like types of accounts, whether it's a mortgage or an installment or a credit card, the limit or amount in these accounts, the balances in this account, payment history, the date the account was opened and closed if it was closed, name of the creditor, and even stuff that is in the public records like liens and foreclosures, bankruptcies, civil suits and judgments. All of this is included in there. And also any inquiries. So anytime any company accesses your report, the next time you check it, you will see who accessed your credit report. So you'll have all of this information about your entire personal finances regarding to credit right there. And the companies, the credit agencies that prepare these reports, these are the three that do it: Equifax, Experian, and TransUnion. So you also might have seen these names out there, but just so you know, these are the credit agencies. Now, we've learned a little bit about like what credit is, what affects it, what are the different factors, what is the credit report, what is the score. But like, let's talk about what the things that you can do to make sure that you not only you're building a good credit, but you're also maintaining that good credit. So the first thing that I want to talk about today, we're going to talk about 6 different strategies. Is the first one, keeping your oldest account open, because that tells the lender that you've had credit for this amount of time. So you may want to make sure that that account is open and you are using it obviously responsibly. But that tells them, okay, so this person has had this account for 10 years or 5 years, and they've been responsible with it. And the longer it stays open, the longer your history with credit is. So you want to make sure that stays open. The second one is credit use, staying under 30% of your credit limit. So let's, think about all of the different cards that you have, or, all the different types of credit that you have. You want to make sure that you're using about 30% of that total. Of course, if you need to go over, you might want to, but also create, this like payment plan. So in your mind, so you can bring that limit down to under 30%. Like that is the recommended amount. The third one, like I've mentioned a few times, it is very important to make your payments on time. Not only will you be avoiding late fees that, eventually means more money out of your pocket, but also it is, again, telling those lenders that you are responsible and you are consistent with your payments. If 1 month you are not able, or you think you might not make your payment on time, don't just let that date go by. Call your lender, call that company, explain your situation, and they might be able to do something. It could be like changing your due date to a later date within the same month, or they might have options. So try your best to make sure that you're making those payments on time, or making the necessary, or like taking the necessary steps so that your credit isn't affected. Okay, so the fourth strategy that we want to talk about is checking your credit report often. Now, usually, it depends on whatever, but you want to check this for inconsistencies. Make sure that, and keeping an eye out for identity fraud, or these things out there, that all the transactions, all of the accounts are there are truly yours. Just keeping an eye out and being very vigilant about these accounts that are opened in your name. And if the moment you spot any inconsistency or anything that is out of the ordinary, report it immediately. And the fifth strategy is keeping a mix of credit types. So you want to, and this is a little bit related to the sixth strategy, that is differentiate between good debt from bad debt. So not only you want to keep a mix of credit types, so you want your credit history to reflect a lot more than just credit cards or department store cards. If you have a car loan, when you get a car ticket, all of these things, they tell you that, okay, this person is not only just spending, but they're also, you know, being responsible with their credit, and they're being very responsible about their personal finances. And this comes in hand with the good debt and bad debt, because good debt is defined as like money that you owe for things that help you build wealth or like increase your income over time, such as student loans. If you're getting an education, if you get a degree, you're probably going to be able to get higher paying jobs than without that degree, depending on the field, of course. Mortgages, you're owning a house, you're uh, a business loan if you're starting, your own business and trying to increase your income over time with that business. So these are good debts. These are things that, funding projects or like life goals, like these things are considered good debt. And bad debt refers to things like credit cards or like consumer debt that do little to improve your financial outcome. Not to say that you shouldn't have credit cards. It's just the way you use them, and making sure that is, you're not full of 7 to 10 credit cards out of different places, and then you owe a lot of credit card money. So you want to obviously have them, but you want to be responsible, and you want to make sure that you're using them in a way that benefits yourself in the long run. Now you might be wondering, where do I check my credit report? So a really good resource that I want to leave you with today is this website, annualcreditreport.com. And usually you can check your report once a year, and they give you like from all 3 credit agencies. But due to the COVID-19 pandemic, you are able to check your report once a week. And you want to, obviously go to the website, make sure there are no deadlines or anything like that. Things are changing as we're coming a little bit out of the pandemic. So, make sure that you're checking it, and make sure that you're able to check it more than once if that's a possibility. Just keeping this in your back pocket so that you're on top of your financial uh, life. And then to end, as I've done all of these weeks, I just want to talk about a little bit about, just giving you this reflection to end. Sorry about that. That was a siren. And just thinking about consistency is key. Whether you are building credit or whether you're trying to rebuild your credit, the best thing you can do is just be consistent. And like I said, make your payments. Pay more than the minimum amount if you can. Pay on time. Just making sure to keep those limits down. And being consistent about it and doing it month after month. It will eventually increase your score and reflect in your credit report, and that you've been doing all of these things. And the longer you do them, the better it is, and you will be building those habits, those financial habits for yourself, so that in the future, once you probably like build your credit, or you are able to rebuild that credit score and credit, you are able to get the things that you want, to get those like life goals, like we mentioned, whether it's a car, whether it's a house, whether it's going to school. So all of these things are going to help you, and also save money in the long run if you are able to qualify for lower interest rates. And well, that is all for my presentation today. Next up on Money Mondays, we'll be talking about avoiding frauds and scams. In the same way, we're going to be talking about, what they are, and a few strategies to keep an eye out and not fall prey to frauds and scams. Like I said, next Monday, April 26th at 6 p.m. If you haven't registered yet, you can go to the same link that you used for today's, which is HispanicFederation.org/Money Mondays, ENG, so in English, and just register, and I'll hopefully see you next Monday. And of course, if you are still, interested in staying in the loop with the work that the Hispanic Federation is doing. You can sign up to receive updates. You can go to HispanicFederation.org and click on the Get Updates button to sign up with an email, or you can text the words HF to the number you see on the screen, 40649, and you'll be receiving text updates about the work that we're doing. We not only do economic empowerment, we also deal with issues of immigration and health and civic engagement. So if these are things that you're interested in, or keeping an eye out for upcoming events and other things, you might want to make sure and you stay in the loop with us. For instance, right now, we are assisting people with their health insurance. So you can call 1-833-656-2626 or email health@HispanicFederation.org, and we can help you from the beginning to end, either to find a plan that adjusts your individual situation and through the entire process of enrolling in it. So if this is something that you are in need of or somebody you know needs it, please don't hesitate to reach out and we'll do our best to help you. Okay, so I'm gonna go check the chat, see if there's any questions about today's talk, and then we'll get going. But thank you so much once again. Thank you so much for being here. And this is the third out of fourth. I hope to see you again next week. Let's see. Okay, so it looks like we only have one question, and that is starting. Okay, so this person is asking about how, like, what is the best way to start rebuilding your credit? So if you are either a new, whether it's like you're new to the country or you're a young person, a student trying to build your credit, or you have had some, mishaps in the past and your credit is not the best and you want to improve it, there is a thing called secure credit cards that you can apply to. And these are really good to help you find your credit. So these are cards that you can make a deposit. So the bank knows that if you default or anything, you have that money. And they usually have a lower credit limit. But if you take these out and you use them again consistently and you pay on time and you use them responsibly, these are the best ways for you to start that journey of either building or rebuilding your credit score. So you might want to check with your local banks or other places that you might know, whether if you already have like a checking account or a savings account, you might want to ask your bank whether they offer these like secure credit cards and if they're an option for you. And you also want to go over the requirements and everything you need in terms of like the initial deposit and like the limits. And these are just like a really fantastic way that you can take advantage of and like really go on to rebuilding or building your credit. Okay, so looks like that was the only question that we had. So again, I want to thank you all for being here, and hopefully I will see you next Monday, April 26th, for Avoid Frauds and Scams. Have a wonderful day.